What is a real estate assessment? A real estate assessment, or tax assessment, is conducted by the county in order to determine how much property taxes you owe each year. The county assigns each property an assessed value based on what they deem to be fair market value at the time of the assessment. In case you're wondering, you can look up your home's assessed value on your county's website, or even sometimes on real estate websites such as Zillow. The assessed value is then multiplied by the appropriate tax rate, also called a mill rate, to calculate your county, municipal, and school taxes. So far, so good, right? Now here's the problem with the tax assessment value and why it can be laughably inaccurate as an indicator of the value of the home. When a county conducts an assessment, it's typically done county-wide and for every single property in the county. This can be a massive project for the county, since there can be tens or sometimes hundreds of thousands of properties within the county. And keep in mind, they don't actually visit the properties, so they have no idea if the home has been newly remodeled or if it's been abandoned for years. So right off the bat, they're applying a value strictly off of public data, such as square footage, year built, number of bedrooms, etc., which can be inaccurate and doesn't tell you the whole story. So the county conducts this massive study, probably pays some consultants a couple $1 million to get it done. Then they got to keep their information up to date, right? Wrong. Most counties in Pennsylvania only conduct a reassessment every 20 to 25 years. So not only is the assessed value based on inaccurate and limited data, it's typically way out of date. So the tax assessed value of real estate is supposed to be a representation of the market value. But in practice, it almost never is accurate. And please, don't mix up your terms. An assessment is not the same thing as an appraisal. An appraisal is done by a third-party appraiser who is paid to visit a single property and determine a third-party opinion of value. And this is typically required by a lender. A high appraisal or a high sales price doesn't change your taxes or your assessed value. They're completely independent things. Hopefully you've learned a thing or two about tax assessments. I'm Kyle McCorkle with Prime Home Real Estate, and thanks for watching.